So, welcome back to my channel, and in this episode, we'll talk about Didi. So, for those of you who don't know, Didi is basically the Uber of China. There are quite a few companies that are basically running this kind of ride-sharing companies in China, and Didi is one of the biggest. When I go to China, I download the Didi app, and it basically functions like Uber. If anything, I think is actually better than Uber because the quality of the cars there are better. So in this video, we're going to talk about two main articles. The first one is, after losing China, Uber's stake in Didi reaps $8 billion in IPO. So this is obviously a piece of good news. China is very protective of its technology industry. So same for Uber. 5 years ago, they actually exited the market and they sold the business to Didi Global in exchange for a stake in the company, which means having some shares. So now, of course, because Didi is IPO'd, they can actually sell their shares. So they can cash in on this $8 billion in IPO. So that's fantastic for Uber. Now, what I really wanted to talk about is actually this article, where China is cracking down on the ride-hailing giant Didi. So for those of you who don't know, Didi just went IPO just a couple days ago, and China pulled it off the App Store in its home market, which is basically the biggest market, of course, and saying that there are security risks. So we'll look a little bit deeper into this article, and before that, let's celebrate another couple of success stories. So Annie made 54% from Intel in 5.5 months. Kevin made 79% from GC and 90% from Intel in less than 3 months. Fionn made 85% from Intel in 5 months, and Daniel made 35% from Intel in 5 months as well. So congratulations to you all. These are very successful case studies, and I'm glad you're making a great profit from what you learned in Investing Accelerator. So keep up the good work. Back to this article, you'll realize that this is kind of a surprising move to Didi, given that they just went IPO and China pulled their app off the App Store. So there's a lot of rumors going around right now about what's happening to Didi, and also a lot of uncertainty around the stock price as well. So let's go through this article part by part. So what is Didi? So of course it's a ride sharing company. Basically Didi squeezed Uber out of China 5 years ago, and the IPO June 30th, which was just 5 days ago, was the second biggest in the US after Alibaba Group. Okay, so that's obviously a fantastic opportunity for anyone who wants to invest in it and aka make a quick buck or even long-term investing. So personally, I don't invest in anything that is recently IPO because it is high risk, and as we go through this article, you'll understand why it's high risk. After I go down a little bit, then you can see that there is an investigation for Didi. So 2 days after the IPO, the Cyberspace Administration of China said it is starting a cybersecurity review of the company to prevent data security risks, safeguard national security, and protect the public interest. So this is actually not that uncommon in China, given that recently they're trying to control the big technology company like Tencent, Alibaba, Meituan, and so on. So this is actually not surprising to me anymore, because it's just part of what China is trying to achieve, is to have more control over their technology companies. So whether this is 2 days after the IPO or before the IPO, this is crucial because some people saying that they on purposely pull the app off the App Store after the IPO to cause the price to drop, which we can then read a little bit further. So the question is, well, are there any hints? And is it just Didi? Well, the Chinese internet regulator has actually widened its probe to 2 more companies. So I suppose these 2 companies' stock price will also be going down. And the biggest question here is really, is there any hint that caused this drop? And here you can actually read it. In May, which is actually 1 month before the IPO, China's antitrust regulator ordered Didi and 9 other leaders to stop their arbitrary price hikes to unfair treatments of drivers. So again, this is part of China's practice to control their big technology companies and also, well, to create a more fair business environment. So more broadly, Beijing is in the process of a sweeping crackdown on the nation's big tech designed to curb their growing influence. In November 2020, the authorities derailed the planned IPO of fintech giant Ant Group. So it was going to go IPO, and Ant Group could not go IPO, and that actually caused a lot of problems. And basically, a lot of people lost money because they couldn't go IPO, whether it's management, whether it's the employees of Ant, and so on. And in April, hit Alibaba with a record 2.8 billion fine after an antitrust probe found it had abused its market dominance. They also investigate into Tencent and Meituan and other big tech as well. So it's not just Ant Group, but yeah, you understand the point. Didi, however, said on Monday it was unaware of China's decision to halt registration and remove the app from app stores before its listing. Now, this sentence is interesting. So if the China antitrust regulator ordered Didi to basically remove some practices or reduce their pricing and whatnot, and whether they did it or not, they said they're unaware, that's basically bullshit in my opinion. So when you think about that, based on some stock analysts of people in Hong Kong that are closer to the ground, they actually said that China didn't want Didi to go IPO, and Didi ignored it, and they went IPO anyways. So obviously they're not listening to China anymore, which is why China pulled their app off the App Store. And when you think about China, you can't really compare them to the US, because in China it's all about the central government. A lot of things are centrally managed. Whether it's commodity prices, they try to have an influence over it, whether it's big tech, whether it's big data. So when you think about that, and you have companies that are trying to go their own way, trying to make money from the IPO, because obviously a lot of people will be buying the company and cash out on their shares, and China told you no, and you still go ahead, then, well, this is the punishment. So let's look at how severe it is. So here you don't really get a lot of information because it just got IPO last week, and you just see one candle. So you actually don't even see any data, including the Bollinger Band. You don't see like the EMAs or the free chart template, and it looks kind of silly. So if you don't have the free chart template, you can always grab it down below in the first link in the description. But anyways, we'll look at this candle alone. So the way you look at this candle is the starting price is around 16.65 here, and for this week it's going down. And when the stock goes IPO, there's actually a lot of volatility here. So you can see the total range is actually $18 to $14. So you can see if you are trying to get into Didi on the first day, you probably have a heart attack, because you might get in at $18 and bam, it went to $14. So then you're shaking your coffee, and now it's back to 15. So that's why I don't invest in new IPO stocks, because you get people jumping into it, you get people jumping out of it, and there's really no trend. Even if you do analysis, it's not going to be super meaningful until the stock actually stabilizes. So looking ahead, I believe the app is still pulled off the App Store, and if China doesn't want you to go IPO and you go IPO, then, well, you got to get punished for it. So that's how I would think about this situation. So if you don't want to lose unnecessary money, then it's probably a good idea to avoid that for now. Now, of course, Didi is a great company. It will probably go up, but it's just a matter of time, and when this antitrust thing will be over. And if you're looking to learn more into how to use this kind of information to make a profit in the market, then you'll be interested in the 4-hour free training below. So you can click on the first link, and you can watch the 4-hour free training, and I cover a lot of concepts and ideas about investing and how you can improve as an investor. And then afterwards, if you're interested, then you can schedule a free strategy session with me to see if you want to be a part of Investing Accelerator. So this month, I'm looking to help 20 professionals without a financial background to master investing, and the target is 30% return.